In this video, I want to talk about capital expenditures. As far as capital expenditures go, when you purchase a non-current asset, a long-term asset, all costs to get that asset in place and ready to use, you get to debit that asset account. That debiting of an asset account is referred to as a capital expenditure. Once the asset's in place and being used, the typical repairs and maintenance of that long-term asset are to be expensed. There's an exception to that rule, that being if a later expenditure significantly extends the useful life of that asset or is a major improvement to that asset, you could arguably call that a capital expenditure and increase the asset. But typical repairs and maintenance expenses should be expensed. In this example, we have during the year more or less recorded $120,000 for the CEO's salary as a capital expenditure. Well, this is not the cost to get a long-term asset in place and ready to use, so this is considered an error. So what they did is credited cash, and what they debited was some long-term asset, non-current asset. I'm being very vague as to what specific asset, but the key is what is the effect on the accounting equation. What they should have done, SHD, is credit cash, assuming they paid cash for this expenditure, and then what should have happened is they should have debited salary expense for the CEO's salary. So when you look at the effect on the accounting equation, their total assets did not change. What should have happened is the assets should have gone down. So as a result of this error, the assets are overstated or too high. Liabilities, they did nothing to them. They should not have done anything, so these are just fine. Never mind. As far as shareholders go, they should have expensed the expenditure. So the fact that they didn't, their expenses are too low or understated, which makes net income too high or overstated. And then when you close net income into retained earnings will be overstated, as will total shareholders' equity. So the effect is that is overstated like your assets.